All right. Thank you for joining us here today, the first panel for the Global Investment Summit. I know you all arrived early, so I know you guys are the dedicated ones to learning about investment strategies in artificial intelligence. So I want to dive right into our content here, but first let's allow the panelists. We have a great lineup of panelists here. Allow them to introduce themselves really quickly. Let's go down the line.
Hi everyone, my name is Harry Mann from Matrix Partners. We are an early stage venture capital fund that is currently managing about $10 billion of AUM, mainly investing into early stage in tech companies in China. I've been for the last 2 years, been spending a lot of time on AI, so very happy to be here.
Hi everyone, this is Lu. I'm the founder and the managing partner of Fusion Fund. We're a VC firm based in Silicon Valley, has been investing in early stage technology startup since 2015 across the United States. And for the sector focus, we do three main vertical: healthcare, enterprise AI, and industrial automation. We're a pretty early player in AI, has been dedicated effort to invest in AI since 2017. So very glad to join the panel today.
Hello, my name is Carman. I was a tech entrepreneur and then become a VC. And 2 years ago, because I want to do some succession planning, so I transformed my VC firm to my single family office. Actually, when I was an entrepreneur, my very first VC meeting was with Henry in China. And when I start my VC firm, I was also starting my VC firm in 2015. It was around the same time as Zhang Fusion Fund. Yeah. Thank you.
Great, thank you. So I know a lot of business, AI-focused business right now is oriented around B2B, but I actually wanted to start out with a question about a kind of a new generation of products focused on consumers that has emerged recently. It's been pretty buzzy in the news. You're probably familiar with it, these hardware-oriented AI gadgets. They've become the tech media, the reviews have been, let's say, somewhat lackluster. But they've generated a lot of buzz. One of the companies looks like they may be trying to find a buyer right now. So I'm wondering about your perspectives on how do you avoid, what do you look for when in these types of startups that are looking to build, you want to get into a company that has a vision for a sustainable AI-focused business. What are you looking for to kind of avoid this fate of over-promising and under-delivering?
Should I take it? Good question. I think first of all, I don't think there is any difference of investing into hardware versus software. Ultimately, whatever things that you're trying to build, you still want to build a product market fit. That's the ultimate goal that any entrepreneur or any company will have to build eventually. So when I'm looking at a software company, people have all these KPIs that they look at, the DAUs, the MAUs, the time that you spend on that particular applications. When we're looking at a similar hardware system, it all have to be the same, right? You have to imagine yourself as being a user, whether or not you're gonna like to use it, whether how much times are you gonna use it on the day, whether you enjoyed it on a day-to-day basis or opening up my phone, 10 times, 20 times, on every day. So if you cannot find a product market fit, it will be extremely hard for any company to sustain in the longer run. In the short while, you could be able to have some kind of hype because people all like to try and play with it. But eventually, it's not useful. And if you're not using it, then the hype will die down and people will kind of like get out of the system. So it is very similar. It has nothing to do with entrepreneur, hardware, or software. It's really finding the right niche of the fit that it fit into the future of what you and me could imagine being like a normal day-to-day user, whether or not you will use it to replace part of your phone, part of your earpods, or whatsoever in the new AI world.
Yeah, happy to add on here. I really agree with what Harry mentioned. We always talk to founder in Silicon Valley. You want to build something people need, not people like. When people say, I like your solution, bravo, congratulations. But when they really need your solution, they will pay for it. It will be sustainable business model. But that's something we didn't necessarily always see from certain startup company. They feel like, oh my God, I have such a fancy idea. I have the best AI solution, a super cool design of the hardware. But do you really understand the need of your customer? We don't invest in consumers, so consumers is a different kind. We do enterprise application investment. That's very straightforward. You know, the large corporate looking at the solution really goes through their own priority list. I have budget for this 10 thing this year, and I'm solving key problem inside my industry. You may have the best AI solution. Do I need it for now? Not really. So understand the need, understand the product market fit, understand how to justify the budget, how to justify the integration of the solution is essential. That's kind of the first line of the criteria for us to make the judgment call whether we're going to make the investment. But on the other side, you know, when you talk about buzzword, that's a common theme in Silicon Valley, right? We always have the buzzword. As a founder and also as an investor, it's important for us to be able to have a consistent methodology and also be conviction with your own judgment with the overwhelming of the information.
Maybe I also add some opinion. So I think especially for hardware, one of the barrier is, because for us, we are used to watch, phone, and maybe glasses. So a few years ago, Google tried to introduce a smart glass, and it was maybe too early. But now, Meta just partnered with Ray-Ban to launch just a Ray-Ban sunglasses with all the smart AI function. So that may be an advantage because the glass itself, you don't need to bring one more hardware and then worry about charging that hardware. Like this morning, I forgot to bring my smartphone. And so people don't want to have too many gadgets that they need to depend on. So if the hardware is integrated with something that we use every day, that may be easier.
Great points. On the point of building buzz, how important for a company now that's looking for a buyer possibly because the buzz did not live up to expectations, or the reality did not live up to expectations. Is that a win for investors if they find a buyer, the acquisition exit? Is that how does that relate to other exit strategies and what you look for in this industry?
I guess for like all of us being early stage venture capitalists, right? I mean, we all like to shoot for the moon. You know, we would like to invest into the biggest idea that eventually they go on to an IPO. And that's how we make money, right? So, M&A or acquisitions, are viable solutions. And actually, it was a lot more active and viable in the US because there were a lot of talent acquisitions. Sometimes these companies, they could not be able to pivot, or, the idea that they built could not be able to make it to the hype or to the buzz that they promised to the investors. But since they are all, I would say, mature entrepreneurs and lieutenants in many ways, I'm sure that there will be bigger companies out there in the market willing to take these talents, as part of building the bigger ecosystems of them. I would like to say that it's probably a lot more active in the US, a lot less active in the China market that I work for.
Yeah. So first, you mentioned my buzzword. Although initially sounds like quite negative to have the buzz, but buzzword does do something in favor to the innovation ecosystem. Buzz help us educate the general market. For example, thanks to ChatGPT early last year, the whole industry, at least in the United States, got educated to learn the beauty of AI, no-code AI platform, and the board of the large corporates start to talk about what is our AI and the data strategy. That's actually opened the door for some of the AI solutions start to integration. So I think that part we should still give lots of the support of the generate the momentum and the buzzword. Come back to your question about the merger acquisition, and Harry's right. Actually, US and China are very different market in terms of exit, liquidity, opportunity. Historically, 80% of the company startup in United States exits through merger acquisition. I was an entrepreneur before I went to so-called the dark side, started a Fusion Fund, and my company was acquired by a public listed company. After 3.5 years, I run it as a solo founder. So it's pretty frequent in US. And there's two types of merger acquisition. One type is Harry mentioned, acqui-hire. We sometimes joke about, okay, look at this early stage team. Team is very strong. Per person worth $2 to $5 million. So that's the bottom line when they got acqui-hire, what is the return profile. Meanwhile, another thing is the strategic buyer are looking at buying something could really supercharge my future growth of the revenue or my future potential business development. That's when the price could go up even further. It's specifically in the past couple of years, we're seeing, I would say, deal size over $1 billion. That's quite impressive. To be honest, typical merger acquisition, couple $100 million, we have 5 or 6 in the past couple of years. It gives you a nice return, 10 to 20x return. But as a venture capitalist, we're looking for 100x, amazing multiple. So we need the latter be $1 billion. But the last year gave you metrics. More than 17 companies in healthcare domain was sold for over $1.5 billion cash. That's all cash offer. Sometimes I joke about 1.5 billion merger acquisition compared with $2 billion IPO. I may prefer the previous one because no lock-in period, right? So I think US is really have this amazing momentum. Large corporates start to realize it will be more costly and lower efficient for me to build in-house. It will be more efficient for me to buy something more mature, make it as a part of my new division and the future growth. And also their mindset of evaluating companies is also different compared with the typical PE firm. PE firm based on the revenue. Okay, how much revenue you have? I have a multiple, that's my buying price. But the larger strategy are thinking about, this solution is already pretty mature, probably making $10, $20 million revenue right now. But if I be able to distribute their solution across my existing customer base, I could make extra $1 billion revenue right away. Then maybe I could buy them for $500 million. So that's an interesting momentum going on. That's also give us a relative flexible liquidity option while waiting for the IPO market to open up. But fundamentally, as Harry mentioned, as an early stage investor, when we make the bet to any single company, we have the conviction that they could make to the major big unicorn status.
Yeah, maybe I can also supplement with some potential exit, which is not 1 billion yet. So our observation is some of our older portfolio company, they were using the previous technology to build their platform. But since the Gen AI, they upgrade their platform with Gen AI, implement a lot of AI automation. So basically the operating costs can save around 50%. So for a company who generate maybe 20 to 30 million US dollar per year, they can save half of the operating costs compared to before. It's only break even, which in the old days is already very good that you break even. And we also see that with the new Gen AI, they develop new product much faster. So it's around 10 to 30% of the development time in the old days. And so this kind of portfolio company, after they, we call it AI upgrade, after they upgraded totally, their exit potential on the M&A is, we found that it's around 3x the valuation of the old model.
So you mentioned a little bit about the different liquidity environments in China versus the US. Can you talk a little bit more about how these markets differ in terms of the types of AI products that you're looking for, the metrics by which you evaluate these startups, and maybe the go-to-market options that are available to them?
Ladies first.
Yeah, so I could talk about the US. I think, we also see the shift happen since last year. Last year, if you look at total investment into AI in general, still 60-70% went to consumer AI. But also last year there's tons of discussion. I publicly talk about it in couple panel and conference saying that I personally believe 90% of opportunity in consumer AI in the United States gonna be dominated by the large incumbents, basically large tech company. Not only they control the GPU resources, everything, they control the data. The high quality consumer data is essential for optimizing and training AI model. So it's quite a difficult market. There's still opportunity for smaller startup. It's just is harder and smaller market share. Compared with that, if you look at enterprise opportunity, it's actually become bigger. Used to be when we talk about enterprise, it's always tech sector. Oh, you build something, sell to Microsoft, sell to Facebook, Google. Not necessary anymore. Industry like insurance, financial, healthcare, logistics, all this industry with huge amount of high quality data. And they need to build up their data strategy. They want to work with startup providing AI capability to serve them. And another good news is they will never share their data with Microsoft or Google. That's the reason they would prefer to work with a smaller third-party company instead of a larger one. And also some of them already make their mind. They don't want to build in-house. They want to work with third-party to have more flexibility and options. Because of that, this year we see a very major shift of concentration of the resources and capital and talent go to the B2B type of the company. Another thing is AI infrastructure. That's a new trend. And we talk about AI be better, faster, but how about cheaper? We all know the cost of the GPU and the electricity running the GPT-4 or GPT-5. You probably heard the news, Microsoft had a power outage recently. Why? Because they were training potential GPT-5 and the spike of the electricity is way too high. So we need technology solution to reduce the GPU consumption, energy consumption, and also latency issue, edge computing, and data privacy. So that's kind of the upcoming momentum right now in the United States because the market is open up, so integration of tech is really high. Value proposition is very clear because I'm helping you, saving your cost of running AI. So we see lots of company revenue growth is quite impressive. I'll give you an example. Out of my probably 20 investment in the past 2 years, over 2/3 of them have 10 to 20x revenue growth. One company I invested in last year in July, seed round, now Series A. They're making $8 million ARR right now. They're now thinking about Series A. They still have $9 million cash on the bank account. So that's the market momentum right now in United States.
I guess, yeah, very much agree. And we actually had a discussion before we came onto the panel about, B2B versus B2C, that kind of like entrepreneurship. The way that we see is actually really very much on the flip side of the coin. I agree very much to the point that the U.S. is a lot more efficiency driven, enterprise services driven. That has always been a big market in the U.S. For the last probably 20, 30 years of venture investing. China, we run in a very different market. We like to talk about that, enterprise services in China, you will never be able to make money. There were hypes and there were rounds and rounds of these software and SaaS companies that has been built and being funded by VCs for the last 10, 15 years. We have not seen anyone that is viable or being listed so far. I think, all things go back to, I would say, the users. People not really willing to pay for softwares and SaaS services in China. So that put a little bit to a stop to us when we're looking at AI. No matter that you're selling software and enterprise solutions to your customers, with or without AI, they're not going to pay for it. So we kind of like stop our strategy on that front. But on the other hand, we are spending quite a lot of time on two particular things. One is really consumer. The other is robotics. I can talk a little bit about the reasons why. Number one, I always like to make this joke. In the US, entrepreneurs like to make things that help you to save time. In China, entrepreneurs like to make things that help you to waste time. So this is what has been happening and has proved to be true. All the best applications in China, from Douyin to TikTok to WeChat to Taobao to everything is China make better. So from what we see from the AI angle, it's going to be very, very similar. We do hope and see that could be innovations and creative ideas being generated with multimodality being produced and in the future, will there be a newer version of WeChat? Will there be a newer version of Pinduoduo, newer version of TikTok being done by new Chinese entrepreneurs? Those could be, that kind of high ceiling market. That could be companies, that could be what we mentioned about what are the KPIs, 100 million DAUs, that kind of thing, that have the potential capability with the new AI eras to be generated. That's on the consumer side. And why on the robotic side, that we're actually spending quite a lot of time in our own personal, not the funds investment into robotics in China, for a couple of reasons. What we've been seeing in the last probably 20 years, China has made everything in the world. And these are not cheap stuff. things that are really up to quality. You know, every phone that you are currently in your hand, every iPhone is made in China. You know, Tesla is made the way up, but you all live in Macau and Hong Kong. You know how the EV market is very competitive in the China market with Xiaomi, with Xiaopeng, with Li Xiang. They are all China-made EVs. So anything hardware related, precise manufacturing, advanced manufacturing, China does have the capability of doing it. And that's why we see the next biggest hardware item in this AI world is going to be robots. Obviously, we do see that there's a Tesla Optimus up there on stage, but we do have hope to see that there will be a lot more of them being produced in China with AI-enabled robotics and robotic ecosystems that could be able to not only go to coffee shops or manufacturing plants, but eventually be moving to like our day-to-day life.
I really want to quickly echo that because we start to look at more robotics application in the United States already, but we found the advantages that Chen's company has. We have this visitor of entrepreneur from Shenzhen came to Silicon Valley, talked to me in my office. He's like, oh, if we want to build something, we could meet with 20 suppliers in one afternoon. That's impossible in the United States. You have to schedule meeting in one by one. That's really something truly differentiated the execution and the delivery. Another thing I want to highlight is open source. We're a big supporter of open source community now with AI language model. And recently I was looking at, okay, there's a ranking by Stanford University about the top open source model and who built what. And there's 2 of them actually from China. And their top performing small model be able to run on the potentially edge device. So I think there's tons of challenge from Chinese entrepreneur for AI. It's just different market have different market opportunity, how to find the best penetration point. I'm also promoting to Chinese founder, come to United States, We work harder and also super competitive. We try to compete out other American founder.
Yeah, I actually want to supplement the adoption of AI in China it seems very different from US. So you guys mentioned about enterprise and also B2C, but I found that the adoption of small shop in China is actually amazing. One of the reasons could be because in China, if you are a small mom and pop shop, actually half of your revenue is from online, and it's totally not like that in all other ecosystem. So it's something very unique, and so that's why I found that since last year, some of these mom and pop shop service provider, especially the online marketing service provider, they start to use AI to provide service to these mom and pop shop. So they are using it already last year, and I've seen some of it. And so these are very interesting observations. And the other point that we touch about the Series A, which become much more expensive, this is also our observation, and it's one of the reasons why for our own family office, when we invest in AI-related fund, we focus on seed fund instead of late-stage fund. Because seed fund, the seed stage is the only stage that the price, the valuation is still reasonable because they haven't get started yet. And when they get started and find a product market fit, most of them can generate close to $10 million within half to 1 year. And so it's like around 10 times of what's happening before. And that's why Series A become much more expensive. It's like 100 or 200 million valuation is for Series A. And that's why we focus on the seed fund.
Okay. So I'm curious about your diversification strategies when you're looking across the board at these various applications for AI. What helps with your diversification? Are there certain subsectors that you think are better to invest into? How does the market affect that? And I'm curious about cross-sector applications. Robotics in healthcare are becoming potentially a very big use case. Are those more resilient to some of the market fluctuations? And is that something that might affect your strategies?
Maybe Actually, I also want to supplement what Henry just mentioned about robotic. I looked at XAI a few weeks ago, and I found that one of the difference of XAI compared to other LLM is they position themselves to focus the connectivity between digital world and physical world, and it's actually the brain that enable a lot of robotics, and the target would be ultimately autonomous. And so that's why I feel going forward, although in the old days IoT didn't take off, but going forward, autonomous robotic, different kind of product may take off, and may not be robotic. It could be, you know, even like a toys, a soft toys for kids, or educational toys that can teach kids language and can be autonomous, running by itself. And so this kind of product is possible in the future.
Maybe going back to like your question that we talked about sectors, right? So I talked briefly about that. We're mainly focusing on consumer and robotics. But you know, although these are subsectors within the broader AI sector, we don't see that as as a sector itself. We can actually have it break down into different kinds of subsectors, put it that way. I can share my experience back in the days when we were investing into the EV market. So we were early stage investors of both Xiaopeng and Lixiang. And investing into the two brand name car companies obviously help us to make $1 billion return and whatsoever and the name. But what we see is only the start of it. Because EV brand name companies is only a part of the entire, I would say, autonomous driving ecosystem. With the investments into these two EV brands, we started investing into, semiconductors, ADAS chipsets, and autonomous driving software companies, and now even into battery solutions, battery management systems, and even new materials for making sodium-ion batteries and things like that. So putting that into perspective into AI, I think our strategy is going to be very similar. We do hope that we can invest into these standalone human droid in the longer run, but within the entire human droid ecosystem, there are still so many subsectors that we should look at. Data that needs to be provided for training, simulators that need to train these human droids, even 核心零部件, right? All these like BOM materials, bill of materials that needs to be built for every single, I would say, components for these robots will be entirely a brand new industry. Because of the growth of the AI, because of the growth of the robotics, a lot of things that were used to be not sexy and much smaller market will now grow into much bigger, TAM.
Yeah, I really want to echo what Harry mentioned about it's more about investing in an ecosystem. It's not just the one specific tech or one specific industry. First, AI is a super tool. And once you have a super tool, why you're not using it? You should use it everywhere. But doesn't mean all the application in the industry going to generate in venture-backable business. We're looking for the star. We're looking for the huge return. And another thing is fundamentally what is different now. For the internet, for example, the cloud service AWS is an actual web service, right? Why? Because we were moving data around. What is the main fundamental of AI trend? We're moving the compute around. In order to moving compute around, there's so many different things we should invest to make it possible, right? Going back to the sector, I already briefly mentioned early on, which industry has a huge amount of high quality data, that will be the foundation to showcase the capability of AI. That's a criteria for you to choose which industry you want to build a venture-backable AI-powered company. And meanwhile, go beyond that. I also mentioned you want AI better, faster, and also cheaper. If you could make it cheaper, significantly cheaper, 10 times cheaper, 20 times cheaper, you could charge a pretty high margin from your customer. That's another thing. So really surrounding that idea into an ecosystem play, you'll be able to really find a multiple opportunity, and also as Harry mentioned, from the hardware to the software, from infrastructure to the application, and even robotics. Why we need robotics? It's not only AI-powered robotics. We need robotics to become the new entrance of the data, to collecting new type of data, to continue source and also become nutrition for AI. So we'll just get started. I totally agree. And there's tons of momentum going on, no matter here or in Silicon Valley, and no matter from the fundamental model to infra to application. So I'm really looking forward to all this opportunity in the future. So I feel for founder, could really reference to the criteria I mentioned, but also be open-minded about potential innovation within this ecosystem, not just try to call the API, build an app. Many people can do that. Think about things others couldn't do.
Great. So we have a few minutes left, but no AI panel is complete these days without a little geopolitical talk. So as you all are no doubt aware, there's talk of, well, there's always already this kind of bifurcation happening between markets with China and the US, the talk of de-risking. There's talks that Washington wants to actually completely lock out AI cloud services from China being able to access those overseas. So how does this impact where you invest and what kind of startups? Does this is this top of mind? Are you thinking about this when you look at the types of startups that you invest in? I can imagine perhaps some, consumer gadgets are less political, maybe a safer bet, but some B2B applications can be very sensitive. How are you guys thinking about this, and what are you talking to founders about when you're talking about putting money into their companies?
I guess to this side, the China side is a lot more sensitive that we can share a little bit about my own experience and what we've been looking at. First of all, I think, venture is always a very geographic focused business. A lot of these companies go global, but they don't go global until they are bigger, right? So we invest in China, for the last 20 years, we've been surviving and doing very much okay with just the China market. With or without AI, with or without the geopolitical challenges, business is being done. So that is the good side of it. At least, I try to convince myself to keep on the, optimistic view of that. If these companies grow into much bigger, like today, the TikTok, the Tencent, the Alibaba, you want to go global. That's totally natural because you want a bigger piece of the pie. But from my own point of view, when I'm looking at startups, local is not a problem at all. Although, in the AI world, there will be a little bit of challenge and differences because when we're looking at, I would say, mobile applications and AI generating, a lot of these software companies, they wanted to go global since day one. And at that point in time, some of the entrepreneurs, they will have to pick the size. Historically, they might not need to. I can build an app, I can do Douyin, I can do TikTok at the same time, and you will never be, blocked one way or the other. But today, you might have to choose your size. Some of my entrepreneurs, from my own experience, I do see that because of they want to go international, they have a little bit of resistance getting money from Chinese VCs. They want to package themselves and move all the way over to Silicon Valley and get the first check, from the Fusion Fund, from the Andreessen, from the benchmark. It has happened. Not as much, but you don't have to pick your size historically, but now a lot of the entrepreneurs will have to. So this is very unfortunate, but I still believe majority of our own ecosystem are still very geographic focused. The US will have their own OpenAI and Anthropic and the like, and China will have the China version. Not to mention with or without political, because language are different. The things that we talk are different. The data that we use to train is totally different. The US will not be able to have access all these China versions of data that used to train the future models for the Chinese users. So it's by default, it has to have multiple versions of it. So from that perspective, I'm not as concerned as what the highlights of the newspapers have always been talking about. But obviously, it adds a little bit of a cloud on top when we're talking to entrepreneurs right now.
I want to supplement a framework that some of the entrepreneurs are using, which is pretty popular. They call it, LLM agnostic, because no matter whether it's geographical, like China or US or Europe, or even within US, you have a lot of different kind of LLM. So a more limbo model going forward, maybe you build a different layer. One of the methodologies, you build a RAG layer. You store all the data on the RAG layer, and then you cherry pick different tasks using different LLM. So in this case, if you have this kind of framework, you could have a China version, Europe version, and US version. You can still go global in some way. Maybe the holding structure will be a little bit more complicated, but even before, when Chinese company want to get listed outside of China, they also use a VIE structure. So I believe that there is some smart structure that can enable any entrepreneur go global, and they can just cherry pick different LLM that they need to use.
Okay. Do you want the last word?
Sure, and I see I run out of time. So I really want to echo two things Harry mentioned. One thing is, I think for any startup company, the goal should be a global collaboration. Like, for example, nobody in Silicon Valley saying that we want to be the best in the United States. Everyone's saying that we want to be best in the world. But you need to start somewhere. Either start in the major market in US or major market in China. Now it's just this geopolitical issue make founders need to think it through relatively early to make your call to grow your business in one market until one day you're too big. Maybe that's also a problem to have, good problem to have, right? You're too big, as big size as TikTok. Now you have to worry about which side to pick. But before that, which also means you already pick a company like TikTok. Another thing is I really think a collaboration between US and China in terms of AI is still happening. For example, in open source. Recently, go back to what I mentioned, a couple open source model in the Stanford ranking on the top 10 in the world. I was discussing with my partner, I'm like, maybe the reason their open source model performs so well is because they're training the model with both English and Chinese. Chinese language is very complicated. And also there's different way of training and the feedback loop make also the model could be unique. So there will be different opportunity in the future. And fundamentally, another thing is data regulation. When we talk about regulation of AI, fundamental is regulation of data and data flow. You couldn't control. So it really requires global collaboration to really make the proper data control, data regulation in place. So no matter what, I think both sides need to talk.
Great. Well, thank you so much. I feel like this was a very engaging and enlightening conversation, and I appreciate you joining today. Thank you.
Thank you so much. And please have a rest first. And thanks so much for their expanding discussions, promoting mutual understanding and advanced studies in these areas.